Hi, I'm Peter Reynolds, and welcome to Pros and Conversations, the podcast that explores what it takes to be successful, whether you're from the world of business, science, or the arts. Turning a passion project into a full-time business takes guts and more than a little strategy. In this episode, we're talking to Steve Ackroyd, a seasoned CPA who's helped countless entrepreneurs go from side hustle dreamers to confident, tax-savvy CEOs. Now, those first 3 years of any business, they're the toughest. Cash flow is tight, taxes can feel like a trap, and one wrong move with the CRA could put everything at risk. And someone who definitely puts everything at risk every time he appears on this podcast is my friend, co-host, marketing consultant, Damon Adachi. Damon, how you doing?
Very good, Peter. Thanks for that intro. It's always going to be a surprise. No, you're right on point. Those first 3 years are so trying for a new business, and I mean, the stats are scary. It's 1 in 5 succeeds, something perilous like that. I have to give a lot of credit for being able to survive those turbulent first years to the people that I surround myself with who know more than I do. And our guest today is one of those people, so I'm really excited to talk to him.
Yeah, I couldn't agree more. I know for myself, those days when I was, working in a solid job in the printing industry and doing videography on the weekends. And at some point, you have to decide, am I going to make that leap? But it takes more than faith.
Yeah. Oh, if only it only took faith. I know, really, like we say, having professionals to give you that sound advice can be the absolute difference between success and failure.
Absolutely. So joining us to talk about that and help us navigate this topic is Steve Ackroyd. He's a chartered professional accountant with over 20 years experience helping business owners not only survive, but thrive. Steve, welcome to Pros and Conversations.
Thank you, gentlemen.
So Steve, I'm wondering if we can start by just telling us a little bit about yourself and your practice and what kind of entrepreneurs and businesses do you typically work with?
Yeah, absolutely. As you'd mentioned, I'm a chartered professional accountant. I became a chartered accountant back in 2006. I've been working since I had hair and graduated university in public accounting, working pretty much exclusively with smaller companies, small to mid-sized corporations and individuals doing tax work. And it was back in about 2013, I realized that I couldn't find firms that wanted to do everything the way I wanted to do it. And an advisor and a mentor of mine had turned to me and said, when are you going to stop complaining about it and start doing something about it? And said, if you think it could be done a different way and a better way, do it. And I said, well, fine, I'll show you. I will. And it was early 2014. I went out on my own and I haven't looked back.
So you took the leap yourself to start your own firm.
It was absolutely terrifying, knowing that I'm starting a brand new thing with no safety net, very limited clients from day one, and a weekly mortgage payment coming on Wednesday. So yeah, it was. There were a few sleepless nights at first.
Even with the advantage of knowing what you're doing better than the rest of us.
Well, I understand the tax side of things. I understand the accounting side of things, but you still have to do it. You still have to run a successful business and build those elements of trust and have those people surrounding you to help you realize the success that's available to you.
What would you say are some of the big financial mistakes that new entrepreneurs make in those first few years?
A lack of planning is certainly something that I've seen very, very regularly. So often what I see is an individual in a sales job or an individual in a various executive type position who says, you know what, I'm going to go do it on my own. And all of a sudden, instead of getting their paycheck of like $5,000, $10,000, whatever it's going to be, all of a sudden they're getting invoices for 15, for 20, and they're like, this is amazing. I'm so successful. And they spend what they make. And then when the year comes around and they're like, now I have this tax liability, it's something which wasn't on their purview before. And so they simply hadn't planned for it and they hadn't sought the advice to know to plan for it. And it causes massive headaches for the first few years, at least, if they can survive it.
Yeah, it's so funny you say that. I actually still have my first check framed from Sevenfold Marketing because it was a big number and I was like, oh, this is going to be great. But it's exactly what you say. It was a matter of, wow, that went fast. Where did
Absolutely.
that go? And, you get a plum account that you're either bringing with you from another opportunity, or somebody says, hey, if you can build a business around me as a client, then, you can actually give this a go. And you start out with that one big number that comes in. And you don't plan for what it's going to cost to get new clients or what happens when that one starts to peter out or things like that. So the savings part of it, the forced savings of putting away money for taxes and doing it in installments or whatever, those are lessons that we learn the hard way as entrepreneurs. And I have to echo everything Steve said about that.
I know for myself, exactly the same boat as yourself, Damon. I mean, I think when I started, I just assumed that it was just an extension of what I was doing on the weekend. I'm getting hired to produce videos. I'm shooting and editing those videos. So it's just what I do on the weekends, 5 days a week. But there was this whole other element of paying the business. And in the early days, I had no concept of what that was about. I was simply paying my, as you said, Steve, spending the money that I earned.
And we've been trained on that through all our years. Like if you graduate high school and you go to post-secondary, if you went there, or any other sort of professional or trade college, and the money comes in, it's like, okay, like we weren't taught in school. Like we were taught in school, yeah, you need to save for your rent or your mortgage and groceries. But introducing, you need to plan for tax, or you need to set aside a certain amount for a buffer for your various operating costs, for compliance, for whatever. Like it's not a lesson that at least they had in school when I was there.
How much, how important in terms of that sort of higher education, if somebody, say, has not, minored in business or doesn't have a business degree, but they're very successful in the industry they're in, they're thinking about going out on their own. What advice would you have for, maybe going and getting some additional education, to understand exactly what they're in for?
Sorry, can you ask that again?
Basically, the idea is that, should people go and educate themselves about business, and go out there and get that additional knowledge before striking out on their own, even if they're successful in their individual industries?
Well, I guess it depends how you define education. Education is a lot more than a paper on a wall. I have papers on my walls. I've got 3 or 4 of them behind me. Now, the papers themselves are simply proof that you've attended a certain amount of courses. And ironically, one of the most successful clients that I've had, he sold his business about a year ago and made a generational return off it. Ridiculously proud of him. He worked really hard. He never graduated high school. He developed a skill set. He worked on the skill set. He had advisors and mentors around him for 20, 30 years. And through that experience, he developed an incredible business acumen, ran a ridiculously successful business, and was able to implement his exit strategy at a great time. So when I look at that, there is education there.
Awesome. So let's take it to probably the first question you get from an entrepreneur when you're an accountant. It's that question of, do I incorporate or not? And I know I had to, give it careful thought. And what I found at the time was, this is a bit of an investment. It's a bit of a process. It's a bit of, a formality that might not seem necessary at first blush. And it's a decision that I've been very happy with ever since, was to say, yes, in the view that I have of this business, incorporating is the right call. But it's not always that cut and dried, is it?
It's in my world, it's ironic. We work with numbers. It's really, all you're doing is addition and subtraction and everything else. There is no right or wrong. And the right answer will exist for everybody, but that right answer will be different. There's certainly pieces that we can look to. So we've seen a recent as in the last 10 years, but we've seen a recent expansion in the number of people who are self-employed, especially post-COVID. And a lot of these people are going through the franchise model. And so they're going and they're buying franchises. And so in a situation like that, where you are buying a franchise or there's a significant capital acquisition happening to start or push that business forward, it's nice to have a framework set up. Is it imperative? No. But it is ridiculously better for you to get it set up properly than to try and go and fix it while the car is running. With respect to starting up a business, generally with incorporating, what I'll encourage people to do is to look at it and understand your exit strategy. How do you plan on exiting? Like, is there going to be a sale of your business? Are you going to retire and pack it up? And these are factors to have in mind, which can influence if you incorporate and if so, when. Additionally, from a general operations point of view, when you're at a position where you realize year over year, you're earning more than you need, as in the money coming in, you don't necessarily need it all for lifestyle costs. That's a good qualitative measure to look at when it could be advantageous for you to incorporate.
I wanted to jump in on there when you said planning for your exit strategy. So you're planning your exit strategy 30 years before it happens, like when you're actually deciding whether or not to incorporate at that early stage?
Well, it's a measure of understanding your business cycle. If I talk about myself personally, what will happen in public accounting is you build a book of clients, a book of people who you like, and they like you, and you guys have mutual level of trust and respect. And as time comes and as I operate my firm, I need to ensure that they're taken care of. I need to ensure that they're in good hands so that when I decide that I'm no longer working, or when my wife decides I'm no longer working, that I'm going to be able to have them be taken care of. And so in my industry, often it is you have a successor or you are selling a book of business to someone who you can trust. I'm not saying by any means you need to nail down September 1st, 2037, that's my day and I'm done. I'm not saying you need to know who's going to buy, but it is good form to understand your industry and understand what's it going to look like when I'm done.
Yeah, and it's not necessarily that you have the complete exit strategy, but it's your outlook in terms of, I was speaking to another business person the other day, a small entrepreneur, and they said, well, I can only invoice up to $30,000 this year because otherwise I have to pay tax and I have to register as a business. And it's, if that's your outlook, if that's your plan, that's very different from a lot of entrepreneurs. But that might be what you figure is your first 2 years, is you know that this is a growth project and you're establishing the framework, and if it really goes that long, great, then you'll incorporate. That's another way of looking at it. But I would agree with Steve in saying, set the foundation properly before you build.
Yeah, and I think your anecdote, there's a great example of someone who had opportunity to get advice, because there's a lot of thought process which could have happened there around his specific concern around that 30,000 mark. And with proper advice, he may have reached a different decision.
Yeah, I'm wondering if you could give an example of someone who would come to you and they want to start their own business, but you might advise them not to incorporate. Can you give an example of that, Steve?
Take your time.
Yeah, no, we're just not going to look at the clock. There was one I'd met a couple weeks ago, and she'd spoken to her friends. She'd looked on Google. She'd done some very quick high-level research. Her friends were saying, you know what, you need to incorporate because you can save a whole bunch of money. And in her case, we sat down and we spoke, and the business had a great year in the prior year, and you can't change the past. However, looking forward, she says, I'd be excited to maintain that level. I'd be super happy to do it, but I don't see that happening. I see things settling in more and trying to avoid talking about specifics on her file, but essentially she's running her business, she needs the income, and she's spending everything she's making and possibly and then some. And so in looking at it and looking at the income level we were talking about, I didn't really see the benefit of incorporating from a tax perspective. So at the end of the day, there is a cost to incorporating a company. There is a cost to filing a corporate year end. And so at the end of the day, as I say to many of my clients and pretty much all of my new clients, if you're incorporating for a tax perspective, if that is why you are incorporating to save money, you should consider these compliance costs as a reduction of your tax savings. So if you can save $3,000 a year by incorporating, and it costs you $4,000 a year to do so, the effect of trying to save taxes costs you $1,000 a year.
So I will admit fully that in my first 3 years or so of operating, I had a line of credit extended and I was borrowing to make ends meet and to keep things rolling and to move forward. And, you're the first person to suffer in your business in terms of, you're the first cut is your own salary. Cash flow is such a killer for new businesses in the early years. Do you have any insight, any advice for companies that want to say, I want to give this a go, but I don't want to sink 50 grand into developing it if it's not going to work? So how do you do it on a zero, on a shoestring budget and still keep your head above water paying bills?
Absolutely. I can easily touch on that. The first thing you need is knowledge. You need to know what is coming down around the corner. A lot of this, there are personal taxes. Often when I speak with people, I explain personal taxes like a staircase. The more you make, the more you pay. So someone who makes $50,000 and someone who makes $500,000, that first 50 grand, they're both paying the exact same taxes on it. It just happens that the next step up and the next step up covers a certain amount of income at a certain level of tax. With a corporation, it works a little different. There's 2 steps, 0 to $500,000 and then above $500,000. And speaking about active income, there's only 2 amounts. And so knowing this and being able to plan around this, even from before I incorporated, what I would do is I understood that the money that I'm receiving, it's not all mine. Registered for HST, so the HST that I was receiving is not my money. So I didn't spend it. The corporate taxes, personal taxes and then corporate taxes, I knew I had to pay it. And I could do a reasonable estimate as to how much that would be. Being the accountant, I did a very conservative estimate. And so say I invoice client ABC $10,000, they pay me $11,300 after HST, it's 13% here in Ontario, immediately, before I would do anything else. I'd probably give myself a fist bump for that $10,000 invoice. It would go into my bank account, and immediately I would do 2 transfers. First, $1,300, I had a savings account set up, transferred it in. I'd just let it sit there. It's not my money. It's not my concern. And then out of the remaining $10,000, I would transfer a portion into a second savings account that was duly called tax savings. Not my money. Realizing it was a conservative estimate, some of it could be my money down the line, but that's after I filed my taxes. And then I would simply have a percent of money left over in my operating account, which I would run my business on.
Sounds so simple.
It does, doesn't it?
Well, that's really the goal. I've seen so many situations over the years where people try and put this great big formula behind things just to complicate it and create like this master marvel within the accounting world. And the more complicated of a process you put in place, the harder it is to apply and the harder it is to hold yourself accountable to it. I incorporated my business in 2015. So I've been incorporated 10 years now. I've been self-employed for about 12. I still do that. I had a client e-transferred me earlier today. I was going through and I was reconciling my bank account this morning. I had X amount in transfers in deposits since I'd last reconciled. Did the math, transferred the HST portion over and amount into my tax savings as well. It gives me comfort knowing that that number I see in the bank account, I know I'm okay. And if I need to make a decision, like say my printer goes and say my printer is $3,000, I now have more information to make an educated decision. And I don't have that fear of how much am I going to owe in taxes? Am I going to be okay? I'm taking that off my plate so I can focus on running my business, spending time with my family, and enjoying things.
We hope you're enjoying this episode so far. Pros and Conversations is brought to you by For the Record Productions, providing video production services to corporate and nonprofit clients for over 20 years. To learn more about how we can help your business, visit videosthatmatter.ca. And by the Business Alliance, a professional peer group that helps you grow your business through networking, collaboration, and sound advice. To learn more about how to become a member, visit jointhealliance.biz.
Yeah, it's funny you mentioned that accountability piece because I will say I started with the same process. I definitely got away from it, and it's because I was more cash rich, right? In the sense that I wasn't so lean in the business. It was doing better. So I didn't have to be so regimented. But we've had conversations in our networking group with some of our guys who have said, I have to have a really good look at my books because I don't even know how much I'm spending every month, right? Things are kind of leaking out and sliding out the door because there isn't that accountability and that record of, wow, I'm paying for this, I'm paying for that. You know, taking on new subscriptions to help my business. I've done things to streamline, to automate. Those all come with costs, and I kind of lost track of where my true expenses are. So, I mean, it sounds like early day stuff you've got to do to make ends meet and manage cash flow, but it is a great practice to keep going with. I think maybe only real accountants do that. But
I have more than enough clients who actually they stick to it like clockwork.
I'll get back to it, I promise.
Well,
I'll be checking.
I love hearing this because I think the challenge that I had when I started is that the accountants that I was working with worked it was a very large firm, and at the time, I think again, I'm making decisions as somebody in their 20s, and you're picking a big firm because things seem impressive, but the problem is that you don't get personalized service. And every time I had any kind of question, there's a big number attached to that question. And so I didn't ask a lot of questions. And I think, obviously I'm going to assume that they should choose you, Steve, but in terms
I'll say thank you to that.
In terms of entrepreneurs out there who are choosing a firm or choosing that accountant, does it make sense to choose the smaller firm? Is there advantage to that over the larger firm?
I think it's all about relationships. Whether you are getting one of the 4 really fancy letterheads, or whether you are getting a letterhead, which once in a while I look over and I'm a bit in shock. In my office here, I keep some letterhead. It's just to the left of my computer here, and I look over and maybe once or twice a year, I look and I'm like, hey, that's my name. When I'm looking at the letterhead, and it's like, isn't that cool? The letterhead is nice. The letterhead's only as good as the product. The product is only as good as the relationship. I'll be the first to admit that personality-wise, I don't meet the mold for the stereotypical accountant. That works very, very well with some people, and admittedly, it doesn't work well with others. And if it's, say, the relationship between Damon and I wouldn't work well, it's a disservice to either one of us for us to work together. I think it's about knowing the person who you're going to be working with. I do know some mid and large size firms where they are able to maintain an interpersonal relationship between partner or manager and client. And I also know some smaller firms where they have not been able to maintain that for whatever reason, whether employee turnover or what have you. And so it's really about having that right fit. Like, I've had clients who have gone to larger firms. That was more because their service need was a little different than what I had to offer. And I've had my share of clients come from larger firms. It's not going to be a one size fits all. And I would just encourage you to, if you're on the market for an accountant, talk with them, understand their approach to business, which could lead into their approach to life. And those tend to be very well tied in. And if there's a good fit, take a look and see how it can work for you.
Yeah, I want to echo this. I look at it the same way you look at your financial planner or your doctor, or somebody like that, where there's a bit of a trust there. They're the professional. It's very important to you what they're telling you, but you got to have that connection, and you feel simpatico. In my experience, Steve was not the cheapest accountant out there, but it wasn't about because he was better or necessarily, he's going to do anything different. It was a sense that this is my gut telling me this is the guy that's going to give me the right advice. This is the guy where I can go, hey, different idea. What if I looked at doing this? And, is any of this outside the lines? And he would be like, yeah, well, that's a little too far out there. So let's
pull that back in.
Yeah, let's stay in the green, but I like how you're thinking, and let's get creative. And so, for me, I've trusted my gut on these relationships in business and felt like I'm not going to pinch pennies on these things where advice is so important. And yeah, having that same point of view in life and getting along and feeling good about talking to Steve on the rare occasions that we get to talk shop, that's been worth all of the investment. And it's definitely shown in the success of my business.
Thank you. And I think to extend on that, in the world that we're in, there's the access to information we have is insane compared to even 5 years ago. And as we go forward and hear people talking about AI and talking about this and talking about that, I don't see that changing anytime soon. At the end of the day, if you're walking down the street and you're hungry and you're talking to a friend of yours who lives in the area, you would turn to them and say, friend, I'm hungry. Where should I go for lunch? We all have these resources to one extent or another, to some extent, where we can talk to people and say, what would you recommend? Who can help solve this problem? And like in finding a financial advisor or a doctor or an accountant or a lawyer or whatever, I encourage people to speak to those who they know. Like with my business over here, probably between 95 and 90% of new clients are referrals. And so it's speaking to Damon, he's like, you know what? I think you'd be a good fit. Here's his number. Here's his email. Reach out, have a chat. And not the one concern that I would have is when people are like, no, I can just do it myself. And that really comes across with that new information, whether incorporating a company or potentially doing their books or their corporate taxes or their financial planning or what have you. You can be in business for yourself without doing it by yourself.
That is very interesting. And I love this concept of it being a partnership. And I think that's one of the big takeaways I'm having from this conversation, is this idea of it being a part, just like as you said, Damon, with your doctor, you're sort of partners in your health, and this is about your financial health and your business. And I think I treat it very transactionally, it's sort of like, here's tax time, okay, now we've done it, as opposed to bringing them on board when I'm thinking about expansion, or I'm thinking about purchasing a new piece of equipment, or, moving in a different direction. They have all the knowledge, and they've seen the numbers to be able to give me some advice on how I might approach that. But I think I've left a lot of that advice on the table, which I'm learning that right now.
There's been situations, and a great example of that. If you're speaking to your doctor, if you trust your doctor, you want to be open and honest. say, this is what's going on. This is how I'm feeling. And within the accounting world, it's actually the same thing. Like, you need that to have a relationship where you can speak to your service provider and say, this is what's on the track. This is what's coming up. A perfect example of that, I have a client where we had that conversation. And within that conversation, they had said that in approximately 5 or 6 years, their plan was they were going to be buying and doing this remarkable renovation on a home. And so, because in the initial conversation, I had said, you have this fair amount of cash built up in the company. Maybe we should look at putting it to work for you, because it was essentially sitting earning nothing. And they said, no, that's a bad idea. This is why. But what came out of that was understanding they needed an absolute army of money about 5 or 6 years down the line. And so my response to that was, excellent. Thank you for letting me know. How much do you think you need? And what we did is we actually increased their personal income. We deliberately chose for them to have more income than they needed in all those earlier years, because across the 5 years, in all honesty, it saved them probably over $250,000.
Brilliant. Brilliant stuff. So I made an allusion earlier to the idea of being outside the lines, but it's a fair question. And, it's a lot of the anxiety around accounting is, being caught with your numbers outside the lines. What are some of the number one sort of pitfalls or red flags or things that new businesses can fall into in terms of triggering CRA's eyes?
Well, there can be any one of a number of things. With respect to the individual returns themselves, I'm going to skip trying to talk about one expense account or another expense account, because everyone's business can be different. Often you'll hear people say, well, you can't claim more than 10% of your home for a home office. One of my earlier clients, we claimed 50% of her home for a home office. She had rented a loft, and legitimately half of her space was set up as office space. And so I really dissuade people from looking at what percentages Google recommends or this or that, and just ensure that you're capturing truly and fairly the costs you're incurring to operate your business and get them in there. From a compliance point of view, there are some places where you can make it clean. Like if we're looking at corporations, and say my corporation is an August 31st year end. So I'm HST registered, I file HST returns, and my HST return is also for the period of August 31st. So on an HST return, you report your revenue. On your corporate tax return, you report your revenue. Those two numbers should agree. If they don't, you might have a concern. You might get a phone call saying, well, Mr. Steve, you're saying you had $200,000 in revenue here, and here you're saying you made $400,000 of revenue. Which one's right? And that's often an awkward conversation to have.
I imagine.
I can only imagine. And I've been through an audit, so I understand the, and again, this was a very kind of random thing, but it was in the early days. And that is when I thanked heaven above for my accountant. That honestly, every dime I've paid since was worth taking away the stress. Because for me, it feels like you hear that word and it feels like, the end of the world. This is, oh my God. But of course, for him, it's a Tuesday, and he knows exactly. And it's like, and that line about it's nothing personal, it's just business really applies. Like, we just have to go through the steps, answer the questions. There's nothing untoward here. These are routine things that happen.
Yeah,
and
it's nothing personal.
Yeah.
Yeah. And that's, I hear that often, that what can I do to avoid an audit? And so the first thing you can do is understand how our system works. Our system is, we are telling the government what our revenue is, what our expenses are. It's a self-assessing system. And so for our system to work properly, there do need to be checks and balances. Otherwise, everyone's going to say, I made $5, I'm not paying any tax. And so those checks and balances are part of our system, and we do see our share of just random ones. My wife had one last year. It was on personal tax. We had childcare expenses, and they just wanted to double check that our childcare expenses were accurate. I had my supporting documents. I uploaded it. Done. No problem. There are further audits when they want to dig into things. Sometimes there's error, sometimes there's not. Ideally not, especially with my clients. But that's just part of how our system works.
It's nothing personal, Peter. Handcuffs are one size fits all.
I'm not going alone, Damon. I am not going alone.
So am I going to hear a clicking sound and echo from both of you, or?
We're not handcuffed together, I hope.
Yeah, that's not good. I will rat you out, Damon. I'm just saying, for a lower sentence, I will rat you out.
Cut a deal actually handcuffed to me at the same time.
In fact,
that's the kind of guy you are.
I've cut a pre-deal is what I've done, David. Okay, so in
Would
case
that
anything,
then make the podcast Pros and Convicts?
Oh, there you go.
Ooh, I like that very much.
He's
I like that
on
a
to
lot.
us.
Excellent. So, Steve, as we're coming to the end of the podcast, I know we've talked about sort of starting your business and maintaining it and advice for entrepreneurs, but how about growing it? So we get to that sort of point where, we want to take that leap, another leap of faith. We want to go from maybe being a solopreneur to bringing on staff, or we want to open up a second location. What are some of the advice you would give and kind of the ducks that entrepreneurs should have in order before kind of making that move?
Okay. Excellent question. I had a meeting about a year and a half ago with these two gentlemen. They were mid-20s. They decided they wanted to get into business together. And I turned to them. They were sitting here in my office, and I said, well, what you need to understand is, like, you're talking about incorporating a brand new business. How do you know you want to work together? And I said, incorporating a business, having a business partner, bringing on a new business partner, it's a new relationship. A corporation is a living, breathing taxpayer. And if you're in business with someone, you are parenting it together. And so before going through that process, and I turned to them and I said, if you're going to incorporate this business together, or alternatively, if you're going to sell part of your business to a business partner, it's like getting married. And I turned to these two gentlemen, I said, before getting married, why don't you date? Why don't you give yourself a year in the grand scheme of things, date, work together, run it as a partnership, see how you feel. Do you want to do this together? It's an element of planning. And did they pay a little bit too much tax because of that? Probably, but it's a lot cheaper than going through a messy corporate breakup. That's the big thing. It's all about planning. It's all about being prepared for what you're getting into. And the other side of it is have an expectation for what the return is. Now, when I'd first opened up my firm, I have the artistic tendencies of an accountant. I have the marketing skills of an accountant. I actually reached out to Damon at Sevenfold Marketing, and he helped with the development of my website, the logo, branding, and going through that. Conservative accountant, I was like, I don't want to cripple my business looking forward. I'm going to save my nickels and dimes until I have a reasonable portion of money that I can put towards this, because I was afraid of debt. I was afraid of taking on this debt in hopes that it will pay off with future additional clients or sustainability of the business. And just that moment of conservatism.
I am very ridiculously expensive.
You were worth every penny.
No, I'm not.
I tell you, your hourly rate on this podcast alone, Damon. My God. Okay, we got to wrap it up.
You missed a comma.
We go over 40 minutes and his rate doubles, Steve. Okay, so really, we gotta wrap her up. Okay.
Thank you and good night.
I guess as we sort of come to the end, sort of any sort of that single piece of advice that you would have that sort of for that, again, we're talking to those entrepreneurs, who are dreamers. They've got that side hustle, but there's something in the back of their head that's going, monetize, this could be big. What advice would you have for them?
A couple quick things. One, don't be afraid to try. Don't be afraid to see if that lemonade stand that you're doing on the corner will do better outside of a sports arena. Don't be afraid to take that step and see what can happen. Remember that, I think I said it earlier, you are in business for yourself, not by yourself. And be comfortable reaching outside of Google or your search engine of choice to get assistance. As much as, no matter what it is you're doing, no matter whatever the innovative idea it is, and there's a whole bunch of them that I've seen lately, someone out there in your circle has information that can help you. And don't be afraid to ask for help, because it's a lot easier to succeed when you have a network backing you up. And if it's not your core, if there's something that isn't your core competency, find someone whose it is. I'm not a marketer. I found marketing. When I was incorporating my company, I'm not a lawyer. I didn't look for the do-it-yourself to save a couple bucks. I spent more money than that. So that way it would be done properly. So that way my focus is in doing what I'm doing and not trying to build the business that I'm doing.
That is fantastic advice. Steve, thank you so much for sharing your deep knowledge and advice on this topic. I think we've both learned a lot, and our viewers have learned a lot. You've given us a lot to think about and provided some tools, I think, that we can take to our own businesses.
Excellent. Thank you for the opportunity to help out today.
And of course, Damon, thank you so much for your insights and sharp questions. Always great having you.
Thanks. I just also want to mention that the three of us are in a networking group. Just to tag on to Steve's last point, if you're not doing that, get involved with a way to connect with other entrepreneurs and learn from other professionals.
Absolutely. I totally agree with the concept of surrounding yourselves with people who are smarter than you. And that is so easy, I've discovered over the years. Of course, thank you to our audience. We really appreciate your continued support of the series. You can, of course, watch us on YouTube and see our smiling faces, or listen wherever you get your podcasts. And so for myself, Damon, and Steve, thanks again for watching. And until next time, I'm your host, Peter Reynolds, and you've been listening to Pros and Conversations.